Good morning. Welcome to Know the Rules of the Game podcast for the SBA, Economic Injury Disaster EIDL loans, and the PPP, the Paycheck Protection Program. I'm your host, Desiree Patno, CEO and President of Women in the Housing Real Estate Ecosystem and NAWRB, and Desiree Patno Enterprises, Inc., DPE, Real Estate Brokerage, and I'm advisor investor for Amicus Brain, AI for Aging Population, and the Chief Strategic Officer for Zulu Time, and the publisher of NAWRB and the WARE Report. We are so honored today to have our guest, Kristy Bain, the Lender Relations Specialist in the SBA Orange County Inland Empire District Office. Thank you, truly, Kristy, for joining us today on such a quick notice, taking your valuable time to helping the 30 million small businesses in the United States. And we'd like to thank the SBA for being proactive in helping all of us. So welcome.
Thank you very much.
Yes, so it's exciting times, to say the least. We're in a very fluid market as what we're dealing with as far as obviously the pandemic with coronavirus and dealing through it. And the new normal is going to be very different. And so the ideas is what we'd like to do today is we have so many questions, obviously, because it's rolling out so quickly with the programs. And I'm very excited, not only from a personal standpoint, but one of the things that we've been touting for so many years is that the real estate is, the aspect of this SBA loan is always to go with taxes and death and taxes. The SBA is never forgivable. So before we get into that, this exciting tidbit I wanted to have at least, let's talk a little about yourself. You were the SBA Emerging Leaders for 7 Month Educational Program Director, which is a program that is unbelievable because it really showcases how you were really working in the depth of working with the SBA. So some of the things I want to talk about as your background just a few minutes before that is that we roll it back a minute here. You can tell how excited I am to have you on the call. Is that your background is very analogous to some of the work that my family has been part of, and I'd really like to hone in that for a few minutes. Here you've been a lender relations specialist in the SBA for 7 years. You started your career with the SBA in Idaho, and you moved to OC 2 years ago. Yet the interesting part is that you served 6 years in the Navy as an Aegis fire controlman, we'll call it control woman, and you worked on the terminal honing system for the SM-2 missiles. I'd like to know a little bit about that because you talked about it before we started our podcast, and I was like, oh my gosh. So talk to us a little bit about that.
So my role as an Aegis fire controlman for the U.S. Navy was to handle all of the electronic systems related to that Aegis guided missile system. Mm-hmm. And then if you've also seen any of the fun movies where they're on a Navy ship, our watch command was inside that dark room where all the lights are down and you see a bunch of radar screens. So we held that watch in that room and monitored our radar screens, and it would have been our role to eliminate any necessary targets. Luckily for me, I never actually had to do my job in the real world, but I was really good at it as far as the video game training portion.
Well, it's very interesting because, before our podcast, I was talking and I didn't even mention to you, I talked to you about my father being the fact that he worked with the Point Magoo and Point Waianae doing the Sidewinder and the Sparrow, which are the missiles that are still used today, right?
Yeah.
And which have been involved obviously very heavily, but I forgot to mention the fact that my husband was one of 3 programmers that actually worked on the OSC coding that worked for all how if a missile went into space, how it went into the trajectory of going through all the different stratospheres and how it came and the fallout from the, if it blew up. So here you are, the one that's in the ship that's going to push the button, and he's the one that's going to impact how it would fall out and hit the earth, right? And who would damage. So talk about a world of just between you and I, who we know and what was doing, right? And what you were doing. So crazy. And here we are dealing with something that's so incredible and impacting our lives. We literally have put a button to where we stopped everything. So if you think about that button you could have pushed because you were commanded to be in that spot, yet thankfully you didn't have to push it. We've now been put into a situation where we stopped that button and said, we're going to stop the world. We're going to sit here and go, what next? And I wanted to really amplify that to the topics about what we're going to cover about the SBA economic injury disaster and the Paycheck Protection Program on how we're going to help the entrepreneur, the small business owner. Obviously, we've been so heavily involved as a resource partner for the SBA on, you know, dealing with as a partner with the national platform as a resource partner to help the entrepreneurship. But here we are dealing with something to keep all of us employed in some capacity. So I'd really like to dig right into this because we have so many questions, and obviously because it rolled out so quickly, there are so many unanswered questions. It's a fluid conversation that are being updated, if not daily, hourly, but also something we talked about that's so powerful is how the questions coming in, they're able to give updates and clarifications to replace the current information out there. So it's very, very important that we deal with that. So I'd like to cover rule number 1, and that is eligibility. SBA is listening to the feedback and providing clarity where necessary. An example of this is the recent clarification on the SBA faith-based business eligibility. So talk to us a little about that.
So as of last week, there was specific verbiage requiring nonprofit organizations, especially faith-based nonprofits, to provide a secular service in order to be eligible. And that has been reclarified over the weekend by our wonderful administrator, Jovita Carranza, and it has come back out, and they are not requiring these faith-based organizations to provide secular social services any longer. So they will be eligible whether or not those services are provided.
So to our listeners who doesn't know what that means, what is a secular social services?
So an example of a faith-based organization that might provide secular social services would be your community church that also has a for-profit childcare portion that anyone in the community can enroll their children into, a profit-making arm that is available to anyone, whether or not they are a part of that faith-based organization.
Got it. Got it. So one of the things that if we go into a deep dive here on the eligibility, I really want to focus on where on the website, you know, the encyclopedia was our guiding book when back in the 60s. Just to have one was, you know, a treasure of treasures, our Holy Bible, to be able to know what something meant, where to look, how to look for it. So one of the things that the SBA has done incredible is revamped the website to make it easier to navigate, to understand, because it is a behemoth of information out there, and to quantify it and make it easily accessible and to know where to go. So one of the things I want to do on this podcast is really focus on where to look and to get that information, because I don't believe a single person at the SBA who knows all the answers, because again, they're being fluid and changing interpretation, what that means. Because one of the things that if we could take a step back, those in the real estate community really understand that when you are, let's say you're getting a loan, the FHA is not the one who gives you a loan. They're the one who insure the loan on the residential side. You have to get the bank, then the FHA underwrites it. The SBA is the same way. In this program, the SBA is not giving you a loan. They're insuring the loan on behalf of the banks who are issuing the business loans, which is what these are, through the programs for the economic injury disaster and the PPP, or the 3 Ps, as you like to call it. So how is it that where do we need to go, and what would be the very first place that you look up versus then just going to sba.gov? What would be the name of the website and the actual finger, we're going to call it, within the SBA Gov of where to look? Let's start with a very basic.
My first recommendation to get the most up-to-date information is to go to sba.gov/disaster. And that's going to take you to a website or a web page that explains all of the available disaster resources we have available. And right now, if you go to any page at sba.gov, it doesn't matter which portion of the website you're in, the very top of that page is going to have a yellow bar that says coronavirus relief options and additional resources. Click here. And if you click on that box, it's going to take you to all of the available resources that we have listed for you. And as you mentioned, some of this information is fluid because we have released the interim final rule, but we're also taking feedback from the communities and from the small businesses as far as what is working and what is not working, which is how we end up with clarifications such as the faith-based business. We also had a reclarification on agricultural business eligibility. And so they have opened that up to allow more agricultural focused businesses to be eligible, since the USDA programs are not deployed at this time. So it's just staying up to date on our website. But I also want to recommend that anyone listening can follow our office on Twitter. Our Twitter handle is at SBA_OCIE. I'll say that phonetically. So it's at Sierra Bravo Alpha _Oscar Charlie India Echo. And if you follow us on Twitter, we are constantly putting out any update that comes from the White House. And our office is hosting daily webinars via Zoom at 11 a.m. Pacific time and 4 p.m. Pacific time. And we are giving live Q&A sessions. I'm hosting most of the Q&A, and any new information that we get, we put out directly to the public there.
So that is fantastic. So the cool thing about that is that you had, I know, some very limitations when you first rolled it out this week, and now you brought it up to, I believe it was 1,000 people who could listen to it. And now I think you said there's something like endless that's going with it. And being that you're one of 68 districts in the United States, and your district, I know, has been the top 5 for many, many years. As far as the number of volume of loans, the number of volume of dollars given out, and specifically different loan programs like the 7A and all the different ones that are out there. And each district is different, and you do not, just make sure we focus on that, you do not need to be in one particular district to be different than another particular district, because this is a national program, correct?
Correct. This is a national program, so the information that I'm giving out on our Zoom webinars is the same information that would apply to somebody in Maine or Florida.
The real piece about that is that I believe it's relationships, because, and that is so key, because what's happening right now is that some are set up more, the overwhelmingness of what's being done. They have more personnel. They have people that are in the pocket that get this done. You know, one of the reasons that, you know, we were able to secure this call is this podcast is not only because the fact is I've been with this SBA office for the past, you know, decade. We've been on the national platform, but also that relationship that I built up with Sylvia Gutierrez and Cherie, who's retired now, but the longevity of being in the pocket, of being there to support the small businesses and really care. So that is so powerful that the information that's being said here in this district, like you said, in Florida and other places, that information, they might not have enough power, manpower, women power, whatever you want to call it, to really connect and get that information out there. So thank you for that. So getting that in the pocket, so powerful. So if we go on, everyone on the SBA.gov, if we were to go click on that, I'm going to walk through it just so I make sure we can reiterate this. If I click on the gold bar that's across every single page, like you said, where would I go next if we were to talk about the feedback that goes with this? So if I'm on that page, now we click on that page, what would we go next after that?
So you can go forward to the click here for more about available SBA loan and debt relief options, because it covers the funding options. And as you work through the rest of that page, it also covers several other just guidance, information, resources. But the coronavirus relief options is what most people are asking for. And if you click on that, capital, access to capital, it will show you on a separate web page about the funding options. And you can see listed across that page is the Paycheck Protection Program. I like to call it the P3 program because it's just too big of a mouthful. We also have our EIDL loan advance, the SBA Express Bridge loans, and the SBA debt relief. So there's several different options that we can offer assistance on. I do want to provide a little bit of clarity between the paycheck, the P3 and the EIDL. So the Economic Injury Disaster Loan, also known as the EIDL, which includes the EIDL advance, which is up to $10,000 that can be made available within a few days and is immediately forgiven. That program is a direct funding program from the US government. The only direct funding program we have is our disaster loan programs, and EIDL falls underneath that. So when you get an EIDL loan, it is directly from the US government, and that's why you can go through our loan portal to apply for it. With the Paycheck Protection Program, it is an expansion of our traditional SBA 7A loan program. And as you mentioned earlier, it is similar to FHA in the fact that the loans are going to be provided by lenders, and then the federal government is guaranteeing a portion of that loan. For other programs, it is, you know, anywhere from 50% to 90%. For this Paycheck Protection Program, the P3 program, the federal government is guaranteeing 100% of those funds for that bank.
Got it. So I want to make sure everyone knows exactly where we're looking. So it's sba.gov/funding programs/loans/corona-relief-options. You should see the funding options that show this beautiful icon of dollars, a writing pad for the 10K advance, the express with 3 like a timer, and then a bird hanging in money with a cloud. And when she talks about EIDL, she's talking about EIDL. So you don't think of EIDL the reverse. So it's actually the same letters, which is a fun play on it. So IDLE is the EIDL word versus this is EIDL. So I think it's pretty funny if you think about it. So very cool. So here we go. If we were to click on, so what we just heard is that the 10K advancement is direct funds from the SBA that they're going to give you versus on the PP, the triple P, the paycheck has to come directly from a bank to go with it, because we've heard a lot of pushback from the SBA, from the small business community and individuals, the independent contractors that go down the list that have said that, hey, we're only taking our own, you know, for example, like some of the banks that we've heard on the news that said that they're only taking the clients that are with them that have a current outstanding loan with them, because it makes sense that they want to make sure that their loan's being paid first. So they're going to take care of the people who applied for this program to get them in first so they get paid first. I mean, that's business economics. We understand that. Not flowing very well because there's not that many else. So what kind of time constraints, one of our questions we had, as you talked about the EIDL, you can get that a couple days versus the Paycheck Protection Program that can take a lot longer. So what kind of time frame are you seeing? Have you seen any results coming through that?
So we have seen results coming through the EIDL program. I had a small business out of Newport Beach that applied for an EIDL loan on March 16th, and they received direct contact from the loan processor on March 26th, and their loan was approved on March 27th. Keep in mind, yes, it's wonderful. So it is great to hear that, you know, the funds are being dispersed. Now for that program, March 16th, I believe that was the very first day of application. So those people are probably getting contacted in the fastest timeline possible. So I do want everyone to realize that I understand this is a frightening time. I understand that everybody wants help yesterday, but they are working as quickly as possible in our disaster loan processing centers. Our team there is designed to assist location-specific disasters, and this is the first time we've ever tried to assist an entire nation through the same portal and with the same manpower. So we are trying to bring on new people. We're doing everything we can at SBA to help get these funds into the hands of these small business owners who desperately need them. And we are just asking for a little bit of patience as far as contact. So with the economic injury disaster loan, under normal operating standards, we would expect for you to get your approval within 2 to 3 weeks. So if you're not being contacted within a few days, that is okay. You haven't lost your spot in line. The economic injury disaster loan has been updated. So when they originally applied on March 16th, there was a separate application process there, and it just couldn't handle the number of people coming onto the platform. So we did partner with some excellent private agencies, private entities that have allowed us to really update our processing system. And that's when we were able to roll out our new online application portal on Monday. That portal also includes the advance option, which is the up to $10,000 advance that could provide very readily available funds within a few days. That is the goal, is to be able to get you that advance as quickly as possible. And then your economic injury disaster loan, which could be up to $2 million, the rest of that application will continue being processed under regular standards and in the regular amount of time, which we're still hoping to see 2 to 3 weeks for people to get their approvals there.
So if we take a step back here, so to clarify for our listeners, the economic injury disaster loan is a quick way of saying, Mom, I need some money, loan me the $10,000. And then from there is that it goes, so then you, in the same time, you're applying for the triple Ps. And if they process it, that economic injury disaster loan, which is not forgivable, will be funded will be part of the PPP, if I'm correct. And that when they say that they're going to forgive 2 full months, is there a cap limit of how much they're going to forgive for that full 2 months? And does that apply to does that incorporate the $10,000 quote advance that's going to be applicable to it?
So the P3 program does have the forgiveness written into the loan. I really want to make sure that people understand that the EIDL program and the P3 program are 2 separate programs that you can apply for individually. So the EIDL loan comes with the EIDL advance, which can be up to $10,000 immediately. But the full application for that loan can be up to $2 million with a repayment term of 15 or 30 years. It has its own interest rate of 3.75 for all for-profit companies. For nonprofits, that's going to be set at 2.75. And the use of those proceeds can be used for payroll costs. It can cover salaries and sick leave. It can also be used for rent or mortgage payments, any material costs or pre-existing debt costs. It is its own loan at up to $2 million. And applications for that program can be submitted for much longer than the P3 program. So applications for the EIDL loan for that up to $2 million will be accepted until December 31st of 2020. This loan is designed to sustain your business through this time of disaster. And when you're filling out that application, we get a lot of questions about, oh, they didn't ask me for a specific amount that I wanted. What the borrowers need to understand is all of the financial supporting documents that are being asked from them in that application, such as their schedule of liabilities or their historical business financial statements. That's all being used for these loan officers to identify how much working capital this business is going to need to sustain itself for 6 months. And that, once SBA comes up with that number, the loan officer is going to contact you. You'll have the ability to discuss your actual business practices with them and make sure that you're going to receive the amount that you need to sustain your business for the next 6 months. In the event that you did not get enough from that economic injury disaster loan, you can go back within 2 years of your approval date and request more funds with that up to $2 million limit. So it is its own loan program. Now, I think where people are getting confused between the EIDL loan and the P3 loan is that you can take the funds from that economic injury disaster loan. If you applied for that loan, got approved, and received funds to cover your payroll costs, when you apply for your P3 loan, you can include all of those funds in your total P3 loan and roll that EIDL loan into the P3, which would then make it all forgivable. And the only amount that you wouldn't include in that EIDL rollover would be the amount of the advance that you received, that up to $10,000 advance, because it has already been forgiven.
Okay. So I'm just like visualizing all this. Okay, so let's go back to square one. That is, if we were to say, you talked about a very valuable piece, the 6 month money that's going to be allocated, you have to give supporting documentation. We're all about helping you help the checklist of what I need prior to talking to my banking relationship or apply, because right now relationships is everything, but at the same time, how do I make sure that my loans can be the easiest for them to process, because I have everything I need to say, here's my story, here's my cookbook, what do I need? So if I'm on the website right now and we're clicking the EIDL loan and you talk about all the supporting documentation, where do I go to get all the supporting documentation so I can have that checklist that's going to tell me everything I need, from my P&L to my cost for ABC?
So when you enter the application portal, there's going to be a window that tells you, that says this is what the regular documents that you would need to provide. They have completely streamlined this process. And I want to stress that to business owners, because it is way easier as of last week to apply for this loan than it was 2 weeks ago. And you can do this by yourself. You don't need to hire somebody to fill this out for you. It is actually a very easy process. You're going to need to be able to document your payroll costs and be able to show your historical expenses. So keep your P&Ls with you. Your tax returns, you can have that with you. It's actually very easy to enter all of this information in. And then if you need to provide any supporting documentation, there are ways that you can do that with the loan officer after they contact you. The requirements for the loan, I do want to hit on that real quick, if that's okay.
Please.
There's been a lot of confusion about personal guarantees. For this economic injury disaster loan, you're only going to have a personal guarantee if the loan is greater than $200,000. If you're working with the economic injury disaster loan, the EIDL program, you will only be required to have collateral if you're getting a loan at more than $25,000. And I really want to stress this point is SBA, we will use collateral if it is available, but if you do not have collateral, it is not an automatic eligibility issue. You would still be eligible. They just want to see your willingness to apply that collateral if it is available. And then the repayment on the EIDL loan is different than the P3 loan. So that EIDL loan is going to be, once it's approved, you are automatically receiving a payment deferment for 11 months, with that first payment due at 12 months. During that time, you will accrue interest on your loan, but you will not be required to make a payment until 12 months. There's also no fees applied to this loan, except a single $100 UCC lien filing and processing fee that's applied. It's added to the amount of the loan, and that's only if you have collateral and are getting a loan at more than $25,000.
Incredible. And unfortunately, we had a break for about 10 seconds when the internet became unstable. For those of you who use Zoom all day long and are chatting, Zoom and every other carrier for the internet is being heavily affected because home shelter in place and everyone doing distance learning and everything else. So crazy time. So thank you all for that, Kristy. So just want to let everyone know there was a pause there for a few seconds. So I want to go back to incredible information. If you go to the bottom of the page, right before the blue bar where it says get help after disaster strikes, right before that, you'll see a very small, it says a sentence, to apply for a COVID-19 economic injury disaster loan and loan advance, click here. That is where you want to go, and you can see and pull it up that the economic injury disaster loan application is basically choose one. Eligibility identification verification, and it goes from point A to point B and is a very robust application simplicity form of making it as easy as possible to go through it. Like you said, this is fantastic. This is like stuff that we're used to, and applying things, anything that's been online. Love it. This is incredible information. So let's retrace our steps here. We have 25,000. There's no personal collateral. You said that even if you go over 25,000 and you don't have personal collateral, still apply, because that might be that it is not a deal breaker. If you go over 200,000, yes, they will look for a personal guarantee. But the idea is that I always say, if you don't ask, you'll never know. Always ask and apply. The worst that could happen is they say no. And that's one thing that I've always known and learned about the SBA is that if someone says no, you go back directly to SBA and you ask why. How can we do it? Because it might be one bank that doesn't understand, or one circumstance, especially as something so fluid as this, that it might be a special case where they need to apply or need to approve. So please do not feel that just because you apply once and they got denied, that it does not mean that it's a forever unapproved loan. All right, so now that we've clarified that the EIDL and the 3 Ps are completely separate loans, one is that you talked about, and a little clarification for myself, that the $10,000 advance that they give you immediately versus taking a little bit longer to do the full loan that can go up to, as we've talked about, much higher dollar amount, that you made a comment saying that is immediately forgivable. So that $10,000, if I'm not mistaken, is that it's a loan forgiveness, that you do not have to pay it back. It's a grant more than a loan. Is that correct?
So it is correct. We don't want to use the word grant. We're using forgiven or forgivable funds. But you are correct. That is an advance of up to $10,000, and it can be requested immediately. When you're filling out that EIDL application and you get to step 4, question number 8, it's going to ask you if you wanted to be considered for that advance. You need to make sure you check that box, or else you won't be considered for the advance. I'm still not certain what algorithm they use to identify how much of that $10,000 each individual business is eligible for. We believe that it has something to do with payroll, but we are not completely certain. So I've been asked numerous times, how do they identify that? We are still trying to learn how they're identifying that. As soon as I know, you will know. But it is up to $10,000. There's no requirement to repay the advance, even if you're denied for the disaster loan. So once you submit your application for the economic injury disaster loan, you can receive that advance. And as they work through the process, if it is found that you don't qualify to receive that EIDL loan, whatever advance you received is still yours to keep and it is still forgiven.
Yes.
I know, right?
Right? So score 10 grand. And again, if you don't ask, you don't receive.
I completely agree.
You know, so here we are. We've got economic injury disaster loan application that you can get 10,000 up to 10,000 now. And then you still apply for the bigger amount. And the idea is that this is giving you free money to use when you need it. And if you don't qualify for it, you get to walk away and still keep it as it's like a signing bonus that if you sign up to get a loan, we're going to give you up to $10,000, and that mystery card, whatever we don't with that mystery value is, you're getting $10,000 to apply. I love it. All right, then I know it's kind of, I know I got me excited here, but see, I didn't know that. I'm loving it. Okay, so that's that side of the portion. So again, the streamlined prices requirements, it's even written right there on it to go with it. That is incredible. And it says loans for businesses, private, nonprofits, homeowners, and renters. So you're telling me as a renter and as a homeowner, I can go get these loans?
So I think there is a little confusion there with that title. The loan is not designed, this particular loan is not designed for homeowners directly. It is designed for small business owners. But what is different about this loan that is not included with most other SBA loans is that landlords who have rental properties are eligible for this loan. So if you have tenants who pay you regularly scheduled rent, you would be able to apply for an EIDL loan.
Perfect. So, okay, so as most of us who are in real estate, or because of the market change have shifted, a lot of those have taken the opportunity to go buy passive income. I like that, buy passive and get passive income by acquiring rental properties, or might own an Airbnb or VRBO, a second home as a vacation rental. So they can apply them, as you said, for this EIDL loan and help offset. So if you are in the pocket where a lot of them own, let's say maybe 2 to 5, and we're hoping to get up to 10, you know, that's the whole adage of building wealth through acquiring property. So right now, because as a turning on the dime, you know, March 13th, shut down, we become, you know, Good Friday, right? We become a different world. I gotta think of 13. I live at, my phone number is 13. I live at 13. You know, like, okay. And I've been doing it for 26 years in the same house. But the core is that, so you're telling me as a landlord having rental property that I am now entitled to apply for EIDL assistance program, that as not getting their rent that's being afforded to me, and or be able to get that program. This is a great way to help a lot of us, because a lot of us didn't know that, me included.
Yes.
So that is huge to our community, because I don't believe that's being talked about and resonated enough that you as a landlord can apply to get the EIDL loan to help offset the not having the income. And let's all pray that we are out of this situation in the next couple months, because that'll help offset, you know, if you're not getting rent, because we have in the state of California where our home office is that our headquarters is out of, we have a moratorium on foreclosures, on evictions and everything else. So as a landlord, we, you know, renters don't have to pay us. And then, so we still have to pay that our loan though, right? Because we're not the homeowner, as a fact that it's not our primary residence. So this is a huge, in my opinion, discovery to really get out to the masses in that capacity. So thank you for that. Okay, so let's go on to rule number 2. We talked about forgiveness. And we're going to get into the PPP a little bit deeper as we go to the compatibility when we get to rule number 3. So forgiveness, this loan can be 100% forgiven as long as borrowers dedicate 75% of the forgiven funds to pay payroll expenses. Now, that is what loan?
That is the P3 loan, the Paycheck Protection Program loan.
Okay, so let's go back to the page. We're going to go back to the SBA.gov to the and go back to that particular page so we can walk through that where we had the funding opt-in. So we're going back to the coronavirus relief options page, and it had the 4 icons across. So we're going to go ahead and click the PPP, the 3P program, and it says Paycheck Protection Program. So where do we go down here? Talk to us a little bit about that.
Okay, so if you've gone to the Paycheck Protection Program, this is going to give you all the information you need about the loan and how it can be applied, as well as who can apply. It also details the loan maximum amounts, and which is $10 million, and the fact that the interest rate is 1%, and it has a maturity of 2 years. It's going to talk to you about the forgiveness details. As we've mentioned earlier, at least 75% of those forgiven funds must have been used for payroll in order for the loan to be fully forgiven. It needs to have been used 75% for payroll. From this page, you can look at a sample application if you're wanting to see what that application might look like.
Okay.
And so you can look there, but I would also recommend that when you're ready to go talk to a lender, you start with the lender that you generally do business with. It is not a rule to work with them, but as you mentioned earlier, there are a lot of banks that are choosing to only offer this program to current clients. And then there's some banks that are not comfortable with it as of yet because the program was rolled out so fast that we're all still trying to learn the ins and outs of it, and not everybody is comfortable moving forward, and that is okay, and that is their choice to do. But in the same breath, there's also a lot of institutions that are accepting applications from clients that have not had a relationship with them before. So I encourage you to keep reaching out to banks in your local area. We are trying to identify lenders so that you can have a better idea of who is open to non-client applications. But as a federal agency, we can't recommend any one bank over another. So we're trying to figure out this information so we can provide it to you in a fashion that doesn't violate our ability to provide not unbiased information. Does that make sense?
Yes. Oh, absolutely. I mean,
Okay.
you're bound by the rules of not being favoritism. I totally understand it. At this point, it's kind of like, though, making sure who's actually going to be providing the service, in the sense that, you know, I'm thinking in one of my responses to you is just taking valuable feedback. You're not saying who, you're saying who's open for business. And I think that would be one of the things that I'd like to have an update, that you have the authority from Jovita to say, from the administrator, who has been in the seat before, phenomenal lady, had the pleasure to meet her numerous times. And she is, I believe that if you could get clarity to say that you can give a list of who's actually accepting applications on the SBA on these 2 programs, and then from there, who's actually accepting applications based on the fact that they're open to new clients, I think would really, really be beneficial without steering anyone, you know, because of conflict of interest. But it's just saying who's actually providing the program, like you said, because the banks or entities do not have to, that normally would do, you know, business loans, are not accepting any of these 2 programs because there is a huge oversight. You know, a lot of the banks are scaling back. They're laying off, you know, tens of thousands of employees. On top of that, you know, they're trying to shift their responsibilities and make sure that their accountability, because here we are in the first weeks of April, and they're responsible for those who are on the servicing side to make sure that they pay their investors because they're responsible for collecting the debt. And then you're asking, hey, on the back end, give a business loan to protect the side. So they're having to readjust their schedule. So I get it, like you said, it's understandable to go with that. So that being said, that's my takeaway back to upper management. I'd like to have that happen.
I completely understand. As we get updates from banks, we're trying to put lists together, but until we have enough on our list, we can't provide it out without showing favoritism. So we're doing everything we can there. I have been all over LinkedIn, letting bankers know, just saying, if you're accepting non-client applications, please make the world know it. And so hopefully there will be some response there, because I don't think anybody foresaw how many banks weren't going to be participating or the level of current client only institutions we would have. And so that has been an unexpected challenge, and we are working through it as efficiently and as fastly as possible.
You know what? So everyone listening to this podcast, please go out and post on your LinkedIn, more than Facebook, I think, but either or, because, LinkedIn is usually your business avenue. But go out there and ask, who is providing SBA, the 3 Ps or EIDL loans? And if so, this is your way to get it through your network. I think that is incredible. Simple but so powerful ask is that please put it out there that you're actually providing this. And this is be a great relationship build that will remember you were there for me when I needed you most. And so my accounts will go to you, because I think one of the things that I know as a business owner, and my husband is a business owner and dealing with this, and we got to get to our questions in a moment here, is that having the relationships with the banking institutions, but most importantly with that individual who's going to be there in a time of need, but with all the fee structures, with all the changes, what they're doing, how they're protecting you. Are they making sure that your money is still being viable and they're not, taking advantage of in case someone attaches your funds that they shouldn't have? Are they being, they are doing that day to day for you at the same time? Are they going to be there for when we have something like this? And so this is a great way to weed out and look for those clients that are going to be there for you to transfer over your funds into their accounts and make them look good, right?
I completely agree. I think this is an incredible time for banks to build relationships with companies and companies to identify lenders that are going to be there for them, whether business is great or we're facing a pandemic and everything's shut down. So it's making those business relationships that are going to be reliable no matter what's going on. And this is a great time to identify those lenders that will be there for you.
Yeah, and that could not have been better used as a social media platform to say, I need to get this loan. I have this business. I've been in business this many years. Who's doing these loans? Because I want to make sure that I was looking, me personally, I was looking to make a change. I'm with a big bank and I'm not pleased with the situation. And for so long, I wanted to change my accounts, liquefied a lot of my assets to go into another account. And I don't know where to go because I'm not pleased, and each one has its pros and cons. So this would be a time for to step up and get it done, because where I physically have my money right now, they're not actually doing these type of loans. So be a great catch, right?
Yeah, it would
okay. Yeah. So that's oh yes, we're all over it. Yes, I'm excited here. All right. So if you made a comment that I can't find, you said under the coronavirus, the 3 Ps, there is a sample application. Where is that?
Okay, I am. So if you scroll down the page,
yes,
under loan details and forgiveness.
Got it.
In the very last paragraph, there is a P3 borrower application form. And you can download a copy of that form, and that will allow you to prepare your application. Please keep in mind that a lot of banks have put this information onto their own website because SBA has authorized the use of e-signatures, which is excellent during this time. So a lot of these applications are being done completely online. So even if you print this off and fill it out, it will allow you to have all the information that you're going to need before you log into the bank's account and start the application. But you won't be using this exact form. You'll be filling out the information onto the bank's website.
Got it. Yeah, but the fact is that one of the hardest things to do is that, you know, there's been, you know, pushback from filing paperwork. You get in the middle of it. You know, when we went through the financial crisis back in 2008, you know, you submitted all your paperwork to get a loan forbearance or to get a short sale approved or to get a loan mod or any other things that going on. And you get halfway through the program and then you have to start all over because they kept, you know, I had a sad saying that they were changing your person that was dealing with you like they changed underwear. It was daily occurrence. And that's where they came out with SPOC, the single point of contact, that you could no longer change. You had to be able to stick with the some person that they'd understand your case and they were assigned to you permanently. And so this is one of the things that I feel that's so powerful is that by having the paperwork there, you don't want to get frustrated that you're halfway through the system and you forgot a form, you have to go get this detail and you don't know what it is. And then you go back and either it saves it or forgets it, you have to start all over. So by having an application form to me as a sample, it's fantastic. So thank you for that. I was thinking looking at it as a sample case, not as a sample form was my misunderstanding. So.
Okay. No, you know, SBA has done an amazing job with this whole program as far as streamlining the process. And I think one of the biggest surprises for people when they go in to apply for these loans is it couldn't have been that easy. And they're expecting these other forms. They want to see our 1919s, you know, other forms that with a traditional 7A, they would be required to provide. And yet now with this loan program, they've streamlined it so much to be able to provide assistance as quickly as possible. You can really complete these applications within 20 minutes. And it's an incredible asset to the small business community when it comes time to requesting this assistance, to not have to jump through 20 different hoops to be able to get your help.
Absolutely. This is, like I said, the top of the podcast. This is one of the best, if not best, let me rephrase that. As far as I've been along with the SBA for the last 11, 12 years, working as a partner, to have the clarity and the speed of what they're doing and also to have it streamlined, like you said, and try to figure it out, and the ease of the website's appearance to get it done. Kudos. And one of the things I just noticed at the bottom right, for everyone on the podcast, the feedback at the very bottom, if you click on it, it says, thank you for taking the survey. It actually will ask you what you like, what you didn't like, how to manage my current business, what are the things that are, what did you do for it? And please give us feedback. So everyone on this podcast, if you don't like something that's on this SBA website or some clarity or something that can help you, they're taking live comment right there, the commentary right there. So that is absolutely fantastic. Okay, so
I want to reinforce that, if you don't mind.
Sure.
That is how we've gotten this new clarification for the faith-based businesses and also the clarification on the agricultural businesses. It's because real business owners are seeing a gap in the assistance or an area that's not clear enough, and they are giving that feedback back to SBA, and so we can actually provide clarification or adjust with what is said in that interim final rule. So please, if you do have comments or ways to make it better, we are taking that information seriously and applying it immediately.
Key word, seriously and immediately. That is that is so powerful. I mean, if you have never worked with the government, you have never worked in the capacity of getting approval from 15 layers to county, state, city, you know, to the feds, to, I could pull my hair out on how long it takes to get a rule passed, and then it has to be, you know, approved by everyone, and then it gets invoked, you know, 18 months out. We're talking like boom, like this is mind-blowing, in my opinion, of how fast that you're working and the capacity to be a resource and to be able to put this together. And you guys were thin to begin with, and to amplify the SBA was this known entity on the side. And one of the things that I like to really amplify is that when we were called 4 or 5 years ago to be an assistant to getting more, the NWC called us up and said, hey, can you be assistants to us in the natural disasters? And I'm like, what do you mean assistance? Well, we have the natural disaster loans, you know, that you can get $40,000 to a renter and $200,000 to a homeowner and $2 million to a business owner. And at that time, it was 1.75% interest at no processing fee, no application fee for a whole year. And you're like, what? I said, I as a renter can get $40,000, and that's free money, and $200,000 if I own a home. And I'm like, you can't give this money away, because it's endless. And, you know, so we got on the bandwagon and started talking about, this is exactly what this is. You know, basically they are, and you know, that I called free money because the interest rate was less than 2%, but this is real free money. This is, you're going to forgive the money. You're giving me $10,000 on the EIDL. You're going to give me 2 months worth of payment to cover my basic expenses for owning the business on the 3 Ps. So we can go now and say SBA is really giving you free money.
Essentially, with that P3 program, so that loan can be up to $10 million. And as long as you're making sure that more than 75% or at least 75% is being used for those eligible payroll costs, the entirety of that loan can be forgiven.
Wow. No wonder. Okay, so $10 million is now free.
It can be, but the point of it is to support our small businesses and allow them to either maintain their staff or bring them back if they've had to lay them off already. So it's really designed to keep our businesses running and keep the paychecks flowing for these employees who have been affected by the coronavirus disaster.
If you think about this, we've heard both sides of the fence being in the community. The half fence saying, why would I borrow money when I close my doors? I can't afford everything that's going on. You hear everyone being laid off left and right. You know, the overwhelming system, they counted the 6.6 million that they reported for last week. They said that we had people that took, you know, had to call 30 times, sat on the phone for 8 hours in certain states to actually get online and find out that they got lost and they couldn't even apply to take their application for unemployment benefits. So when we hear 6.6 million, that could be as high as 10 million or even higher because of all the people who didn't even get to register to apply for unemployment. So so that's the negative, saying, well, why would I want to keep my doors open if everyone's unemployed? On the flip side is that this is an opportunity for all of us to keep the engine going. If we're all home sheltered or sheltered in place, then the idea, or stay in place, the idea is that it's allowing you to continue to operate your business, and they're paying your expenses. Obviously, there's quantifications that go here to keep your doors open. So we are still working and being sheltered in place at when we are able to go out and go back to going out and visiting people and doing our normal work of business to some capacity, that we can slowly ramp it back up, but we're having someone help us, give us that money to keep our doors open, even though our physical doors aren't open, but our business of e-distance is open, right? And that's how we have to look at it. And not everyone's going to jump on this bandwagon, but those who do jump on this bandwagon are going to have the opportunity to continue, because the idea is that if you keep it open, you give it the opportunity to continue to grow as an entrepreneur of a small business, then you have the opportunity, because not everyone's going to do it, to then be the successor, be the survivor to get through this.
I completely agree. And I think during this time, I can understand a business owner's concern about, you know, why would I take on an extra debt? But really, if you're following the rules, which are clearly laid out, then there's not a lot of confusion as to what qualifies as payroll when you look in that interim final rule, which you can get a link. You can go to a link there on the website that we're looking at under loan information. There's a link to the interim final rule, which you can look at. It clearly documents what payroll costs are included. And part of that is the insurance premiums. And what kind of culture are you really building for your company and for your employees? And consider the loyalty that you're going to build with your business family if you take these extra efforts to get that extra support and maintain your employees on your payroll with this P3 program, keeping their insurance active during this time when a lot of people, if they don't have work and they've just lost their job, they're losing their insurance as well at a time when we're suffering in a pandemic reactions. So take that extra step and help your business. Build your own business culture as something that's supportive and there to help each other out in the best of times at business and in the worst of times. This is an opportunity to do that. And as long as you follow the rules as far as 75% or more of those funds being dedicated to payroll, you would be eligible to not only build that rapport with your employees, but also have a forgivable loan of up to $10 million.
That's incredible. It's invested in the people. People don't realize that 60% of all or more of all the businesses that are employed today are small businesses, and that's what's keeping the doors on. The economic growth of the last decade, 2 decades has been the small businesses, and now they're doing everything they can to keep the small businesses open. So by taking that extra time to filing, I know questions been out, we'll run out of the $349 billion because they already burned through $6 billion in the first 3 hours it was open. I personally believe that, they're already talking about if they do run out, they'll allocate more because of, they're already talking about going back and looking at another stimulus package. Does that mean it's going to happen? No, but does that mean that those who are going to get their focus point to put it together to apply for it? I know I am. I know that everyone that I know, I'm going to push as hard as I can to really analyze what do you have to lose. In my opinion, nothing other than the time to apply. The worst that can happen is you say no. And I apply for it to make sure that it is going to be follow the rule book. And then you're going to get another leech line to actually help you continue to keep your doors open and go forth. And if it doesn't work, then if they forgive the money, then you're not out anything. That mental endurance of keeping your reason why you have a small business open is so powerful. So if I were to close out this rule number 2 and go on rule number 3, where would I want to make sure for my own clarity and for all our listeners on this podcast, where do I physically click? You said, what is the guiding and what payroll qualifies? What kind of, how that broken down on the website? I see contact loan information, who can apply, loan details, and forgiveness. Is that where I click on?
Go to the loan information. It's that first block of content. And then in the second to the last paragraph, it says the interim final rule for applicable affiliation rules.
Interim final rule. I say under lender forms and guidance, I said announcing the paycheck is posted on the publication of Federal Register. Interim. Oh,
so you're on
and the loan information under the top. under loan
Yes.
information? Okay, got it.
So click on that link for interim final rule, and it will give you a PDF that you can open. And I can tell you, if you go to page 10 of that PDF, you're going to get an explanation of what qualifies as payroll.
Page 10. Okay, I must be on the wrong. Okay, is this the one that says Business Loan Program, Temporary Changes, Paycheck Protection Program, 13 CRF Part 121?
Yes.
You said on page 10, and
Okay.
I'm looking at under non-profit.
This one is only 16 pages, and the one that I've pulled up is 31 pages. So let me.
I love it. See, we're making this go through it just to make sure, because all good. So I would like to recap while you're looking for that.
Okay.
Go ahead. Did you find it?
No, I said, okay, I'm looking for it.
Perfect. Okay. So what we're talking about is that if you look at the opportunity to apply for both the EIDL loan and the 3P loan, $10,000 on the advance, that can be a separate forgiveness on the EIDL loan. And then on the PP and the 3P loan can go up to $10 million depending on it. So the key component here is 75% of the money you're asking for has to be for loans. So if you think about it from that perspective, is that so if you have, let's say, $100,000 budget per month, or even a $10,000 budget per month, let's do $10,000 on a per budget month per month of what you have for your loan, that's 75%. So $10,000 of that. So you could have, what are we talking about? That's $12,500 per month in expenses, where that $10,000 is considered that 75% of it, right? So with that being said, you've now applied yourself to making sure those numbers are close enough. But the idea is that you're having your payroll covered. And then we talk about insurance. We talk about your lease agreement that you have with your landlord regarding your commercial space. You talk about your utilities. You have, your internet service, your phone service, several of those other services. So you got 25% of auxiliary services that go with that. And then 75% goes with the payroll. So there you go. If you trim the extra costs that are outside of that, you've given yourself a 2-month leash, that extra line to go with this. And then on top of that, as you said, it can continue on. So go for it.
Yeah. Okay. So I found the right one,
okay.
The full document on the same page that we were at. If you scroll all the way to the bottom under lender forms and guidance.
Okay.
That first paragraph, it says the interim final rule.
Okay, so what we're going to do, we're at the SBA.gov fund and programs /loans /corona relief options / paycheck protection program, the 3 Ps at the very bottom. It says lender forms and guidance. The very first line under that paragraph says the interim final rule. It's blue, highlight, click on it. It says download PDF, click on it. And we have 31 pages. Oh my gosh.
Yes. Okay. That's what you want to see is the 31 pages. You have the whole thing. And the beauty of this interim final rule is it's really going to explain how to do your payroll calculations as well. When I go over P3 on our Zoom webinars, I generally talk about those calculations just to help people, because the methodology is pretty simple, but if you haven't seen it before, it can be intimidating. So you can see here on page 8, it tells you step 1 for that calculation is identify the aggregate payroll costs from the last 12 months for employees whose principal place of residence is in the United States. Step 2, you're going to subtract any compensation paid to an employee in excess of the annual salary of $100,000. I get a lot of questions on this. So if you have an employee who makes $120,000 a year, their salary up to $100,000 can be included. It is just the salary over $100,000 that needs to be left off.
Got it.
And then so that's the same for independent contractors and sole proprietors. Step 3, calculate your average monthly payroll costs. So take the number from step 2 and divide it by 12. This is going to give you how much you need for payroll per month. Step 4, you're going to multiply that amount from step 3, your monthly payroll cost that you found in step 3, by 2.5%, by 2.5, I'm sorry. And then in step 5, you're going to add any amount from an EIDL loan that you received from January 31st to April 3rd. That is an EIDL loan that you would have used for payroll. You're going to add that amount to the P3 program so that it can be included as forgivable, less the amount of any advance. We've talked about that advance of up to $10,000 several times. It's immediately forgivable, so it would not need to be included in the amount that you roll into that P3 loan. And if you scroll down to page 9, it will actually give you, I believe, 4 different examples of calculations to really help you understand what's going on and how much you can include.
Oh, this is fantastic. This is exactly what I remember watching on the podcast. Is like, okay, where'd you get this document? Okay, I want to know where this is. Because I see you searching and going through it. I'm like, okay, this is my Bible. This is to me the key core that's going to be able to help us in this. So this is fantastic because it talks about how, you know, the multiplier, what that goes to. So a lot of the questions are going to be answered by this. So as you talked about here on page 16, about 75% of the 3P loan proceeds has to be used for payroll. It goes down what it defines it, where it goes, it even says here that the administrator believes that the finite appropriations and the structure of the act warrant a requirement. So it really goes into the mythology of why she's doing what she's doing, where her headset is. So if you don't believe that she's anticipated or absorbed what she needs to change, this is why that feedback would go back to that red button on the website is so powerful, because you can't think of everything. And until it gets out into the general public on what's being affected, we are the pilot program, the test case on a national basis right now in your face. Right?
Exactly right. That's what makes this all so good, isn't it?
And you be in your seat, be in the hot seat. I'm trying to be the know everything. I feel sorry. Being honest. This is all about a learning curve for all of us. So I love it. I love it. It's just, and the fact that they're actually writing content that says they believe, they're trying and hoping, that's credible. All right, so let's go on to rule number 3. The EIDL loan and the 3 Ps compatibility. If you receive an EIDL loan for payroll, that loan will be rolled into a 3P loan and will be eligible for forgiveness under the 3P loan program. You can also take out an EIDL loan for non-payroll expenses and a 3P loan for payroll expenses. That was a completely different way of writing what you just said. All right, so let's talk about that a little bit deeper.
Okay, so if you've received an economic injury disaster loan, you are still eligible to apply for the P3 program. And I'll go into it a little more in detail. So if your EIDL loan was not used for payroll costs, it does not affect your eligibility for a P3 program. If your EIDL loan was used for payroll costs, your P3 loan must be used to refinance your EIDL loan. So we talked about that earlier as far as that step 5 of calculating, rolling your EIDL loan into your P3. The point of that is because the P3 loan program is specifically designed to support your payroll. That is why it is for the 8 weeks after disbursement, you're eligible to get all of those funds reimbursed, not reimbursed, excuse me, but forgiven. So if you did take out an EIDL loan, which does not have any forgiveness language written into the actual loan portion, if you've used that loan to cover payroll, they encourage you to roll that over into the P3 loan because then it would be eligible for forgiveness. The Paycheck program's maximum amount is $10 million, as I said before, with a fixed 1% interest rate and a maturity of 2 years. And, you know, it makes sense that you would roll those funds into the P3, considering the economic injury disaster loan, which would be better suited for your longer term fixed debts because it's providing up to $2 million with long-term low interest for up to 30 years.
Wow. Okay, so that they're doing, your SBA is doing everything they can to take an existing program, amplifying it by the 3P loan, and working together and conjoined to give you the best of both worlds, and making sure that they're simultaneously being helpful in both sides and continuing and making sure that you get the benefit of the new loan to complement the existing loan that you had. And I think that the way we could really analyze, I mean, to think of this is that when the natural disaster loans came out many decades ago and dealt with FEMA, a lot of people did not realize that you could get a FEMA loan and a natural disaster loan simultaneously. One, FEMA was to stop the damage from happening. It was not to fix the damage, but to stop the bleeding. And the second loan, the natural disaster loan, which is the SBA is the minister of it, and that's why I'm talking about that. They administrate the loan, is that the natural disaster loan was to actually repair and replace and help you be in existence, like the renter was for a car or for a phone or anything a renter could get what was damaged by the natural disaster. And a homeowner could actually fix their home and besides getting a car and everything else. So here we are at the same place. One, we're talking about the EIDL loan, getting money directly from the SBA. And the other one is talking about having to use a bank to get the money that's insured by the SBA.
Yes, ma'am.
So,
and they've done to make them work together, as you said, to give borrowers the best chance at getting the funds that they need in the most efficient manner.
Tall order. Unbelievable.
It's not been easy.
Yeah.
And not without its hiccups.
Yeah. And the coolest thing about this is that we have come a long way from where we started 30 years ago, 10 years ago, 5 years ago, a year ago to the last week. And thankfully, really embracing technology, having the existing private parties really stepping up to help the government agencies and entities to really amplify this quicker and faster instead of going through the normal channels. So that has been unbelievably great. So let's go through some of our questions. We have a truckload, I really want to hit some of these questions out there that are going to be helpful. And I know you're not going to know the answer to some of these because we discussed prior to, but the thing is that they're rolling it out. I mean, you got an update on the faith-based program just yesterday, and they're working 7 days a week. They're working through this whole platform to get this done. So, and I wouldn't be surprised if you're going to get multiple updates a day, just like we are getting updates every hour on the hour on various different things. And hence the overload in this. And that's why I'm taking the time to really amplify this podcast to making sure that I am clear, so everyone on the call is clear by double tracking and getting it done. So with that being said, we have several forms. So the Paycheck Protection Program borrow application form. That's on there. You can print it out. It's only 4 pages long, of which one page you fill out, and the second one you sign and you initial. So that's your 3 Ps. So you can see that sample that's already there. Then you have the Paycheck Protection Program lender application form. It goes through, you want to talk about that a little bit more?
Yeah, we can definitely talk about that form. Do you have any specific questions on it? Or
this is the lender information application structure. I'm just looking at it. So what we got, this is identifying information about the lender, the applicant. So this is just a form that we can fill out for the Financial Privacy Act to make sure that the lender certifies. So this has to do actually with the lender to go through it. No, I'm just looking at there's so many different forms online. And okay. I'm really glad that we went over the interim rule, because I did print out the 16-page one before I got on the podcast versus on the 31-page. So that could be trashed. Okay, we're good. All right, so some of the questions. So I think we can, okay, so one of the questions that came in was people that applied early before they had all the details, should they reapply?
So if you applied early before the EIDL advance was made available and you would like to be eligible for that, then yes, you need to reapply through the new platform, the new application portal, and make sure that you select the step 4 box 8 to verify that you want to be included with that EIDL advance. That will not make you lose your place in line. So wherever your previous application was in line for being reviewed, this new application will simply be added and included to that information.
Excellent. What is the realistic turnaround time?
At this time for the economic injury disaster loan, we're still hearing 2 to 3 weeks. And I think that that's still very fair. As far as the P3 program, that loan has been designed to be approved sometimes within the same day. I know that we saw many approved loans as of Friday, which was the first day it was rolled out, and they should be able to disperse funds within a few days.
Fantastic. Okay, what about leased employees?
So we've had a lot of questions on that. Nothing in the specific guidance surrounding the P3 program addresses the employees or leased employees. But I do want to turn people's attention to 13 CFR, the Code of Federal Regulations. It's part 121 and 121.106. And so this is what SBA is normally going to look at for our general requirements. And it does, in this section, it says Section A of 121.106 of 13 CFR, in determining a concern's number of employees, SBA counts all individuals employed on a full-time, part-time, or other basis. This includes employees obtained from a temporary employee agency, professional employee organization, or leasing concern. SBA will consider the totality of the circumstances, including criteria used by the IRS for federal income tax purposes, in determining whether individuals are employees of a concern. Volunteers, i.e. individuals who receive no compensation, including no in-kind compensation for work performed, are not considered employees. So I know that we've had that question numerous times. I can't give you a direct answer on the P3, but in citing the Code of Federal Regulations, it would imply that they could be included.
I go back to the question, I go back to the stance, if you don't ask, you can't find out, and they might change the rules. So ask now and apply. So, because I know when we set up our companies that I made sure that we had one company be the main focal point for the employees, the insurance, everything, and then all the companies would lease the employees from that main company. So the question would be whether that company, the main company that's a C Corp that has all the regulations and that would apply, but there's different companies that do different things, and having a, you know, some of the small businesses, and even big companies do this, is that they have a tier of, you know, the parent company, and they have the companies underneath it. But to save money and to share and to spread the expenses, that they would allocate, one company would do a certain thing that would offset and insure and minimize the exposure, especially, you know, being home based in California, where everyone is sue happy. Not everyone, but it has a higher number, obviously. All right, cool. So thank you for that. So let's apply to go with that. A couple other questions that are, so a franchise, we have some of our listeners that are franchised, whether it's going to be just in real estate, where some are big companies that have been around for decades, have each one are independently owned and operated. Where do we go to find out about franchises?
So we've been told that to qualify for this program, you still need to be an approved franchise on SBA's list of approved franchises, which you can find on the website. And we also received guidance last week that, considering the no more than 500 employee rule, unless you're in a specific NAICS code that would allow you to have more than 500 employees, if you're having a concern with that, they sent out guidance last week saying that perhaps you had 7 different locations. Well, right, you could apply for each one of those 7 locations, especially if the employee count is over 500 collectively, but each individual location would be eligible for its own loan.
So I think thank you. So I think there's a couple different ways of classifying a franchise. You have as franchises to where they're each are independently owned and operated. But as a franchisee, you have the responsibility to pay a certain fee structure, let's say to the parent company, or to, I'm not gonna say a parent company, but beholden to a company that you're part of. But you yourself are responsible for the entire facility. So your comment saying that if I'm an independent franchise company and I have 10 offices, but all the money that I make out of those 10 offices, I have to pay a certain percentage to another company, but I independently own those 10 offices, you think, or possibly, that each one of those, if I have less than 500 employees, that I could file as one entity for those 10 offices because they're just 10 different locations?
Yeah, you can file as one entity, or you could file for 10 different loans to cover each individual office, is what has been communicated to us at this point. Okay, excellent, excellent. That's, again, fluid. We ask, you apply, and if it doesn't work, why not? So they can make some determination of why, because the whole end game here is to keep as many people employed in their current state where they were. You know, we've getting the homeless often into a building, keeping you employed in your business to keep the economy moving, keep the, you know, the growth going, is what this is all about. So it makes sense to me that, like you said, that if it doesn't fall within the 500 as all entities together, but keeping each individual location, would make sense to me to keep that going, because they are independent within themselves. So, okay, cool. Okay, next question. What if I'm over my COVID-19 is over and my business has not recovered? What then? As far as the economic injury disaster loan, If your business is still struggling and everything is back to normal, but you're still struggling to get back to normal operations prior to the disaster, for that economic injury disaster loan, you are eligible to request more assistance up to that $2 million threshold for up to 2 years after your initial approval of the initial loan. I would also at this time recommend that business owners become acquainted with our business consulting services. SBA doesn't just offer loans. We work with our paid resource partners, so they're funded in part by grants from the SBA to provide free consulting services to the public. And that's going to be our small business development centers, SCORE, previously called the Service Corps of Retired Executives, and also our women's business centers. And we have numerous locations all over the Orange County and Inland Empire District, as well as nationwide. These service centers can sit down with you and help you to strategize your business through this downturn, and then also strategize to come back from this pandemic and figure out how to really revamp your business and bring it back to the operations it was before, and hopefully better.
Excellent. No, thank you for bringing that. The SBDC, Small Business Development Center, is an integral part of the work the SBA does. And like she said, finding someone that you really gel with, really are there, that connects to you, making sure that you show up and committed to get the work done. You know, the SBA and their resource partners are all about keeping you and helping you. And a lot of them have been in the industry or part of the platform for decades. They really love what they do. They want to see you success. In fact, as a recipient of getting the Champion Women in Business Award in 2016, they go around highlighting your success, because when you succeed, they succeed. And that's what this whole thing is about. And they truly care and want to give back. And SCORE, having 14,000 professionals across the United States, to a lot of them are, you know, top of the game, CEO of major companies I've seen. I had when Procter & Gamble and some others taught me in my university when I was in a junior college. They were there to help. I'm like, you're who? And that's what these SCORE people are coming in to help from all different aspects. Usually a lot of them are retired and here to give back their wisdom and expertise at free. I mean, that's the crazy part about it, is free. And then the women business centers, last I count, I think there was 130 across the nation that are out there to help. And these are situated, like you said, all through the nation. And they're supporting the SBA staff, especially now more than ever, on going through it. So thank you for that resource. We didn't touch a lot about the independent contractors. You know, there's been such a big struggle about the independent contractors for the last couple of years, from Department of Labor, what's considered an independent contractor versus employee. You know, how many hours can a person work? Is it 40 hours? Do they go in salary versus then, you know, not, you know, all of those different things. So with this new ruling, not ruling, with this obviously with this EIDL and 3P program, if you're an independent contractor and you have people that work underneath you, how do these programs apply to you?
So the independent contractors, anyone that would receive a 1099, they're considered self-employed small business owners. So they cannot be included on the payroll calculation for a large company that contracts with them, but they can submit their own application, and they would include their own payroll in that application for their loan through the PPP program, the P3 program.
Okay, so for clarification, everyone, if I understand you correctly, is that I own a brokerage and I have agents that are underneath me. So that agent cannot operate without hanging their license under a brokerage. And so since they're still not an employee, they're independent contractors, the way they're situated here in the state of California, they're not salaried. So because they're not on my payroll, I am getting a specific portion of their fee structure, depending on how you have your commission set up with that and with that agent of yours, that they're not eligible for me as a broker owner to write them off as an employee because they're an independent contractor, but they, because they file their taxes separately as an independent contractor owner, then they would themselves apply because they have been curtailed in a lot across the nation that they can't do their normal real estate transactions. Is that correct?
Yes.
Okay. So you have to physically be on the payroll, W-2, taking out taxes to apply as a payroll person.
Yes, you do. So any sole proprietor or 1099, those type of business owners are going to be applying for their own loans, and they'll use whatever source of income they generally pay themselves with, because a lot of times a sole proprietor doesn't have themselves on payroll. They'll pay themselves with, owner distributions. You just need to record that as your income and make sure that you have proof of it.
Now, one of the questions is that, thank you, is how we are commission based and how it's cyclical. Like there's so many sales positions, whether it's in, it's tied to commission based of the selling price of an asset, whether you're in, selling any kind of goods or services. So being that you can't say how much your income would normally be from month to month, week to week, because you can, like in a commercial real estate or industrial, you could be working on a transaction for 9 months to 2 years and then all of a sudden have a windfall, but not have your next paycheck for 5 years, literally, or have, be more like cyclical that you're doing like property management, let's say. How do you calculate that loss of income?
So right now they're looking at the last 12 months of what your income was, and they will consider commissions, any kind of wages, salary, commissions, or similar compensation. At that point, we might have to get real creative with our SBDC consultants if you haven't received something in a couple of years. But I would stress that whatever proof of income you have, you use with your application. And if you feel like you need to explain yourself outside of the available space, you can always submit an addendum with your application that includes whatever argument you need to supplement your claims.
Got it. Because you're going to have a lot of nonprofits, let's say that, I'm working in a capacity that I do, commission-based product. And then on the sideline, I've been building up a business, let's say, and being a nonprofit or give back to community, but it hasn't been formalized. But I've been giving all this free education and training, let's say. And then all of a sudden you said, okay, in 2020, I've launched the company. It's moving forward. But I don't have any payroll or income that I've generated prior to, but now the company's taken off and all of a sudden, boom, stopped. So it's kind of like future income coming in versus then it took you were setting up that company to launch. And I like the fact that you pulled in the creativiness of that. How do we look at that? How do we go with it? Because you're positioned yourself to get that going. And then all of a sudden it's not there. Or you had contracts in place that were signed, but now they got, there's an instant concept. You had contracts in place, but they got canceled because they're no longer supplying or needing the services of you. Is that considered income?
So I think we also have to remember that the point of these loans is to sustain the business. They're not designed to provide any revenues lost. They're simply designed to make sure that you meet all of your basic business debts and cover your payroll until the time that we can open back up. In regards to being in a position where you were starting a business and now it's taken off more than it was, I'd be a little concerned with how that would qualify if there weren't any prior payroll expenses or regular business expenses you had to meet to sustain that business. But again, as you said, ask and make them tell you no. So just make sure that you can defend all of that very clearly and concisely with any supporting documents. And I believe your second question was regarding, I'm sorry, my brain just went blank. I totally had your answer. The second part of that question.
Yeah, no, I'm good. I forgot what the second was, to be honest, because I'm writing notes as fast as I can.
Okay.
No, the core is that I was trying to amplify that the second part of the question you answered was the revenue. Can I include that revenue go with it? Because there's a lot of people that'll work years and they pay personal debt to keep things going, but they didn't separate it as a business. And then they amplify it. And you answered in the sense that, remember this, and this is what was so profound. Remember that these loans are not about lost revenue. They're about taking care of meeting our business needs and debt that we have on the books. This is not about lost revenue that was coming in or had signed to come in. This is about keeping the sustainability of carrying the costs. And this is your new revenue. You're thinking about, in my opinion, is that if we were to coin a phrase, the SBAs is your line of revenue, because the other revenue that was scheduled to come in didn't come in, to keep your doors open because of the payroll and your basic needs.
Yeah, so it is, and it's designed to sustain your business, not necessarily to keep up with any expected profits that were coming in. You know, I just remembered the second part of your question. You asked about how to document lost contracts. So if you do have direct expenses to those contracts, what they have said to do is attach those contracts as supplemental items to your applications. If you can't do that immediately through the EIDL portal, then once that loan processor contacts you, make sure you have all of those documents ready to go, because they'll most likely ask you to email them in. That way you've got the support and the identification if you have any current expenses related to those contracts, especially if they've been canceled or delayed.
You summed it up perfectly. You're talking about how we can keep us sustainable. Documentation, documentation, documentation is the number one key, because you're painting a story, and the better you paint the story, the better the opportunity to get approved.
Absolutely. I think in every training I give on any SBA program, whether it's in disaster or just a traditional 7A, I stress document, 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 and that's to my borrowers, and it's also to all of my lenders. Keep all of your documentation.
That's so powerful. I thank you so much for being here on this podcast with us. I have one last question before we wrap it up with our quote. If I have part-time employees, are they considered part of my payroll?
Yes, they are considered part of your payroll.
Excellent. So there you go. I could not have asked. This is a lot. This is intense. But what's so cool about this is that you now know exactly where to look. We've identified where you can go get your questions answered by a 31-page document. I would highly recommend, like she said, refer back to the website every day just to see if there's a new update. You can also sign up for the SBA.gov newsletter to obviously track them much more intently, like we have been for years. Also, you can also reach out to us here at NAWRB to help as a resource for doing this. But I'd like to, before we sum it up real quickly, I'd like to give a quote. Your quote, I think, is absolutely fantastic that we got on the line. "I'm not afraid of storms for what I'm learning how to sail my ship," by Louisa May Alcott. Tell me a little about where you got this quote and why.
You know, I found that quote probably 5 years ago, and I was just at a difficult point in, I think, identifying where exactly I wanted to go with my life. And sometimes things don't work out exactly the way you believe they're supposed to, but it's about not giving up and pushing through no matter what. And I really felt like this was relevant here because we all have to be brave and stand up and fight through this time, even though we feel like there's a meme out there with a little goldfish with a shark fin strapped to it that says, "Be brave, even if you're not, pretend to be." And that quote reminds me of that meme, and all of that just kind of loops into the time we're in. None of us truly know how we're going to come out of this situation, but we have to keep faith that we are going to come out of this situation and we're going to make it work no matter what. And that's part of this storm. We're in this storm together. SBA is doing everything we can to help you weather this storm and come out on the other side.
Moves my heart. It is truly, you know, we think we've seen the worst we've gone through. I know personally 2019 was a very personal, you know, a lot of family passing, a lot of issues. And, you know, you thought, okay, fine, we weathered that, you know, here we are at 2020. And, you know, the whole positivity of helping each other, being there from our business, from our mental strength. And like you said, we all are going to go through disruptors during our life, and knowing what we're doing to help each other is so powerful. And we've all been thrown, I don't care how big, how small we are, you know, the SBA and the small businesses are the lifeline to the big companies. Without us, they couldn't exist. And I think there was a famous lady she's doing a podcast now from the fashion industry. And she says, "You are the company. Without you, I am nothing." And she was really, you know, talking about her staff and how powerful it is to have such an incredible support cast. And I believe that SBA is that support cast, that you are the access to capital and you're been there through thick and thin. It's just a matter of knowing how to implement it and to be able to exercise it. And now that you are in the forefront of saying, we're here for the money, please use us, and we're doing everything we can to make it to where it's painless for you as much as we can. So that being said, I am so thankful. So if we could go over real quickly, Rule 1, eligibility. SBA is listening to the feedback and providing clarity where necessary. Rule 2, forgiveness. The loan can be 100% forgiven as long borrowers dedicate 75% of the forgiven funds to pay payroll expenses. And then Rule 3, the EIDL loan and the 3P compatibility. If you make sure you get it, if you receive an EIDL loan for payroll, that loan will be rolled into your 3P loan and will be eligible for forgiveness under the 3P loan program. You can also take out an EIDL loan for non-payroll expenses and a 3P loan for payroll expenses. That being said, as you can see, we took a very deep dive into the programs that they have, where to go and get those signed up. So, and anything closing, Kristy, is there anything else you'd like to add?
I just want to remind everybody that SBA is doing everything we can to support our small businesses. You guys are the backbone of our economy, and we are doing everything we can. As I said, we're trying to bring you as much support as possible. And if you want to stay up to date on new announcements, please follow our office at SBA_OCIE on Twitter.
Excellent. Is there any way that they can get a hold of you directly, not to add more workload to you?
Yeah, no problem. If you want to get a hold of me directly, you can reach out to me on LinkedIn under Kristy Bain, or you can email me at kristy.bain@sba.gov.
Excellent. So Kristy is spelled KRISTY.Bain, BAIN, at SBA.gov. Excellent, excellent. So I am your host, Desiree Patno. You can get a hold of us and follow us at NAWRB. Again, that's NAWRB.com. I am more than happy to field questions and help, and this is what this is all about, the way we can leverage and help each other and our resources, because the more we know about you, the more we can help you, and the more we know about these different programs is what this is all about, so we can share together for the better quality of life, which is the motto of what we're doing. Again, the motto, that was good after all this, right? The quality of life, the entrepreneurship, and the equality is really what this is all about to make this help. So thank you from the bottom of my heart, Kristy, and we'll keep in touch and we'll keep this updated and we'll get this out there. So again, have an incredible day, and thank you all for joining us on Know the Rules of the Game.
Thank you very much, Desiree.
Mm-hmm.